This is Eric Muathe with Muathe.com. It is March 12th, 2020, aka 2020, and we are looking at the market here down about 2,000 points as far as the Dow is concerned. Just want to take a look here and show you something that all market participants should be sensitive to. So right now, yes, the market is down. Now, if we go and take a look at this period here, which is not the current market, but this is the 2008, 2009 bear market period here, we can see that this was a major market meltdown. So many will call this a crash period in the market. So yes, the market was down, but even though the market was down, and in fact we can say that October was when the crash took place, this period right here, if you were around at the time and trading the markets like some of us, you'll notice that even though 2008, 2009 saw the biggest market drop in recent years, but you can take a look throughout that mess, the top percentage gains on a daily basis as far as the markets are concerned, and this is for the Dow, are also in the 2008, 2000. In fact, we can see here the top 5 percentage gains for the on a daily basis are all between 2008 and 2009. And other than this one move here, all of these other moves, the market would go on to record new lows. What I'm saying is, yes, the market is down, but if you've been trading for a while, you know that the next daily swing trade in the market is going to be of massive point gains on the Dow, similar to anywhere from 5 to 6 to 7 to 8 to 10%, even more than that on a daily basis. In other words, if you are short the market, understand the risk is very high that day to day they might just decide to change the script, and you're going to see a huge couple of up days, if not a single day here and there. And yes, the market might go on to record fresh lows, but in the midst of all this volatility, be aware, snapback rallies can be absolutely strong. And if you're short, you gotta understand the risk is also elevated. I guess in some ways, this is a warning to everybody who's trading in the market that predicting the next move in the market is difficult, and the size of the moves is also becoming very difficult when the VIX is trading at higher prices. Now, here is the rest of the video recorded over the last hour or so. This is Eric Muathe with Muathe.com. It is March 12th, 2020, and this is where your markets are trading. I just want to point out that yes, the market is down significantly, and we are going to continue seeing this volatility, as we know. Why? Because the VIX is trading at higher price levels. So whether you are bullish or whether you are bearish, expect this volatility up or down to continue. Now, the reason for this video is that if you are spending your time trying to analyze the news, trying to understand whether you can get some insight by watching the business news and the business media, or on social media, then you are already losing this game, because the best way to approach any market at any time is to use the technicals, which is why today I've spent my time trying to highlight to paid subscribers to Muathe.com that they should be on the lookout for a very strong, fierce, huge, multiple 1,000-point on the Dow move to the upside from current levels. Why? Because that's what the charts are saying. Is it going to be immediate? I'm not sure, but it's coming here in the next couple of days. It's going to be in the magnitude of 2, 3, 4, 5,000 point gain on a daily basis as far as the Dow is concerned. Why? Because even in a bear market, you're going to get periods of very strong, sharp moves. And if you don't know what you're doing, and even if you know what you're doing, you got to be very careful, because the moves are going to be gigantic, ginormous. So the best course when the market is this high with the VIX is to stay out of it, wait for the market to calm down. There will be plenty of opportunity to trade the markets. Remember, even when the market was making new highs over the last couple of years, all-time highs, that market was fake as all get out. And right now we are seeing this massive drop. Again, it's all fake, it's all manipulation. And if you think you can be ahead of the manipulation, then you're really gonna be putting yourself in very dire straits. In other words, best to be out of the market. Market will come down at some point in the weeks and months ahead. Right now with the VIX at these current levels, be on the lookout for the exact opposite of a big up day. That big up day might be stabilizing the market or might be a fake bounce before we see new lows. We don't know until the charts tell us down the road. Eric Muathe, Muathe.com as always. If you want to follow my best real-time analysis, you know what to do. Peace and blessings. ESSENCE.